Hi there, John Bowens again with Equity Trust Company. In this segment, we're going to be talking about establishing a self-directed IRA and potentially transferring funds from an existing IRA or rolling over from a 401k, 403b, thrift savings plan, or other employer-sponsored plan, and ultimately how to get started. Let's get to the whiteboard. So once you've made the decision to truly self-direct your IRA or other retirement account into real estate, private lending, real estate private equity, or other alternative investments, it's time to get started. So let's talk about how to get started, how to get your account up and running. So there are really three methods by which you could potentially fund a self-directed IRA or other investment account. The first is transferring from an existing IRA. The second is a rollover. And if you are eligible, you could roll funds over from an existing plan. We'll talk about what that looks like. And then last but not least, contribution. This would be if you were to take money out of pocket, so to speak, assuming you're eligible, and make a contribution. Of course, we always encourage you here at Equity Trust Company as a passive custodian to consult with your tax professional or other financial professional regarding these particular matters. So let's first talk about a transfer from an existing IRA. We call this a trustee to trustee transfer. So let's say hypothetically you have your IRA, traditional or Roth or a SEP IRA, whatever type of IRA it might be or investment account it might be. Let's say you have that with XYZ Bank or XYZ Custodian. What you're doing is transferring money from that IRA over into an equity trust IRA. It's just like a bank account transfer to bank account transfer. Now, of course, you're not being taxed or penalized if you do everything properly. So as long as you do everything properly, transferring that money from one IRA to a self-directed IRA, there's no tax consequences or penalties. Keep in mind that self-directed is just an industry term, just indicates to you that you have the ability to take control and invest in what you see fit for that particular IRA. So that's trustee to trustee transfer. Fundamentally, what do you need to do? The first step of the process is to complete an account application. Through Equity Trust Company, you can log on to the Equity Trust website and you can complete the account application via our electronic system and DocuSign that application so you don't have to print and scan an email or fax documentation. Okay? Or you could also call Equity Trust directly, speak to one of our account representatives, and I would encourage you to do this. That way we could provide information and guidance on how to set this up. So you would fill out your application, and then you'd also fill out what's called an account transfer form. So in most instances, the IRA company that you're currently working with is going to require that they receive a form requesting the money to be sent to the Equity Trust account. So you have two documents, if you will, to start this process: an account application and an account transfer form. And in terms of the details and how to do this, again, you can go to our website and start the process. I'd also encourage you to call in and speak to one of our representatives. So now that you have these two documents, they're submitted to Equity Trust Company. Equity Trust will then send the account transfer form to your current bank or custodian to request the monies. Now, when we send this form to this current bank or custodian, some require originals, some will accept a fax, some need just a copy, and we can mail it to their offices. So they all have different policies and requirements. You can reach out to your current IRA company to get more details on that, or you can call us and we can do a conference call over to them to get some more details on those particular specifics. But ultimately, the transfer form goes to your current IRA company, and then your IRA company will send the money back to your Equity Trust account via check or wire transfer. So some custodians will send a wire, some won't, some only send a check. They have different policies depending on the company you're currently working with, but generally speaking, most of them will wire transfer the money back into the IRA. So now your IRA is funded. Now, a common question that comes up, two common questions, is number one, do I need to transfer over the entire balance of my existing IRA, thus closing the existing IRA? The answer is absolutely not. You can do a partial transfer, and then you could do an additional transfer later on in the year. You could do as many transfers from one IRA to another in one given year. All right, so you can in fact do a partial transfer. The second question I get quite commonly is, do I need to liquidate all of my stocks, bonds, mutual funds, other traditional asset positions? In most cases, you do not. There are some instances where we can't receive a traditional asset, but we do have the infrastructure to accommodate what's called an in-kind transfer, which means if you don't want to sell off the stocks, bonds, and mutual funds, but you want to have your account set up and funded, ready to go in case a real estate investment opportunity presents itself, you can transfer those assets over in kind. And that's important to take note of, that if you're serious about this, if you know you want to buy real estate or do other types of alternative investments with the self-directed IRA, that you set up and fund your account well in advance. Because you can imagine these current IRA companies are typically not always willing to overnight send the money to your equity trust account. It could take 2 to 3 to sometimes upwards of 4 weeks to get money transferred from one account to another. So again, it's imperative that you have your account set up and funded well in advance. So let's talk about a rollover. A rollover is when you're taking money from an employer-sponsored plan, a qualified plan, and rolling it over into an IRA. So providing that you are eligible to do so, you can roll monies over from these existing retirement plans and move them into a self-directed IRA. So let's talk about the different types of employer-sponsored plans that you may have or others that you are working with might have that could potentially be eligible to roll over. The first and most common, of course, that we see is a 401k. So if you have a 401k with a previous employer, you no longer work there, you're eligible, you can roll that money over into a self-directed IRA. The next account type is a 403b. 403b. So think teachers, state employees, people that work for nonprofits. They generally don't get a 401k, they get a 403b to save for retirement. The next is a 457 plan. The 457, the 403b, and the 401k, for all intents and purposes, are synonymous. They're different areas of the Internal Revenue Code, and they're different types of retirement plans that one could potentially have depending on the employer that they work for. 457 plans, generally speaking, think police officers, firefighters, people that work for your municipality government. They have a 457 retirement plan. When they are eligible, they can roll that money out and put it into an IRA. The next is a TSP plan, Thrift Savings Plan. This is for federal government employees. So federal government employees, they don't get a 401k. They, generally speaking, get a thrift savings plan. Same goes there. Once they are eligible, they can roll that money out into a self-directed IRA. And then last but not least, you hear of pensions. So if you have a pension or you know someone that has a pension plan, defined benefit plan, more formally speaking, you could potentially roll that money over, if eligible, into a self-directed IRA. For all intents and purposes, these are tax-deferred accounts, generally speaking. There are some of these plans that will have what's called a Roth component, where you roll it over to a Roth IRA, but generally speaking, these plans are tax-deductible, tax-deferred, so you'd roll the money over into a traditional IRA. So assuming that one is eligible, how do they get started? How do they get the account set up and running, and then the money rolled over into the plan? The first step of the process, just like an IRA transfer, is filling out an account application. So there, again, one could reach out to us via our website or call us directly, and one of our account representatives can walk you through this process. So an application will be completed, submitted to Equity Trust Company. We will establish the self-directed IRA. At that point, you'll have access to your account online. We call this our My Equity system. So you'll be able to see your account in real time online. You'll then call your plan administrator. So whether it's a 401k, a 403b, 457 TSP pension, you would have a plan administrator that oversees the plan and the money's within the plan. You would need to reach out to that plan administrator and ask for a direct rollover. That's the proper terminology to use. You're going to make that call to the plan administrator and ask for a direct rollover. Now, all administrators have different policies and procedures. Some you can do everything over the phone. You ask them for a direct rollover, they cut a check made payable to the Equity Trust IRA, they mail it to you, you mail it to Equity Trust, the monies are deposited, and you're off to the races from there. Other administrators might ask you to fill out rollover paperwork or withdrawal paperwork. So you'll fill out that paperwork, submit it to them, and then they'll cut a check made payable to your Equity Trust IRA and mail it to you or mail it directly to our offices. Now, the direct rollover is an important term because what you're doing is you're sending the money directly from the plan to your Equity Trust IRA. In doing so, you're not creating any tax consequences or penalties. I'll repeat that. you're not creating any tax consequences or penalties if you do it properly and you're doing a true direct rollover. Again, the money never touches your hands. It's going directly into your equity trust IRA. So in recapping this segment, you have a transfer, rollover, you have a contribution. We have other training specifically on how much you can contribute and eligibility requirements. A transfer, trustee to trustee transfer, you're filling out an application and transfer form. Transfer form goes to the current IRA company. The money gets sent over to the equity trust IRA, and then you're ready to move forward with your investments. And then a rollover, you're setting up your account, and then you're initiating a direct rollover through your plan administrator. Thank you so much for joining us on another segment. For additional educational videos, subscribe to the Equity Trust channel. All of our updated videos, we'll make sure we send those out to you and give you real-time notifications. We look forward to seeing you on the next segment.